So, but yeah, any other I mean, we've gone through a lot, so I enjoy it. I know we're making content for, for a lot of, I think, for the long haul, which is great. But
So,
let me
so,
any
so
other
just, yeah, just sticking with this macro topic here. Sorry, so
yeah.
we can continue filling this out. So typically when you do macro like this,
Mhm.
um, we talked about leverage that you could do some leverage that would be on exchange. And then other times is possibly just like saying, oh, like this point of using Matic, it's like, should we just buy the coin in that situation? Just say, well, we're going to buy it and we're going to wait and see. And like you just said, people go in there and buy $5,000, $10,000 worth of this stuff and then just let it sit. So they actual buy the actual asset, like in
Yep.
Coinbase or something, stick it there and say, I'll check you later.
I mean, I think that's kind of individual preference. I think if you were going to do that, that would be one that you probably, I think most people would agree. It'd be wise to have like a fundamental understanding of what it is you're investing in, because unlike trading, where I think a lot of us will trade things that we don't even know what they are. We just go, oh, there's liquidity and there's plenty of people, longing and shorting, and there's a lot of action. We can take advantage because we have the charts. I think, long-term investment, especially where you kind of want to have a set it and forget it for a long time mentality. I do think probably most people would agree best practices would be to investigate the fundamentals of what it is and actually believe in, what it is. And so I do believe that most of the big money in Matic, um, to some degree, researched it and bought into it, believing in the fundamental, thesis of it. So I think if you have the fundamental understanding, that's great. And then from there, it's really nice to also be able to say, man, I believe in. We'll use Pyth, right? Because Pyth is new. So you're like, I believe in Pyth. I heard all about it. I've studied it. I think it's great, but I also want to have the freaking charts support me because I know that it's going to show up on the charts at some point. There's going to be like, a time when it goes orange on larger time frames with expansion. And so I just need to pick the time frame that I'm interested in, and that's when I want to go, invest. And so I think the fundamental ideology is important because you want to know that other people are going to buy into this and that it will have that longevity. But I think once you have that, then having all of this data and timely alerts, that let you know specifically when it's highly likely, again, just statistically, to
Hmm.
take off, is really nice. And you just kind of have to decide the time frame that's real for you. Because, if we look at this chart and we ignore the explosion, and I would say there's a real estate company, EXP, that like was kind of the same way. It was just off and on for like a couple of years, I think, and then right around the pandemic, it exploded and it blew up and went, really high. But if we look at it, like this is kind of the life of Matic, um, and price action and everything, um, to that time, right? So it was like not that exciting. And so if you think about it, like imagine you read a newsletter, we'll say like the Motley Fool, right? That's it's not really that's more of a stock one, but
Right.
everybody has it. There's like Palm Beach and different newsletters. And so like maybe you find like a few things that you want to keep an eye on because fundamentally you've heard that they're amazing. To me, like that's awesome. And at the same time, like having, I mean, there's a couple places where we saw that there was a little bit of bullishness. But I think if you had that and you had like, I read The Motley Fool, and my friend Bill is really smart, and he's the head of a crypto company, and he told me about this thing. And then I also saw it in, like that other publication. Um, just having that layer of data that just says I'm not gonna buy it until I see signs of bullishness on the chart, is what I would probably say is like that nice third layer of confluence, because then you have all of the textbook considerations, right? You have your fundamental analysis, you have your public sentiment analysis, which we know right around here was growing. So you could check that. You could also look at the whole crypto space, or stock space for fear and greed. And you could say, oh, are we in a phase of like, whatever, fear and greed? And then what's the public sentiment around the thing that I'm thinking about investing in? And then lastly, I think, why it's the one I focus on, from a day-to-day perspective, you have the technical analysis perspective. And once you have the technical analysis perspective, you have all of these, plus you just got the ping. And so you literally just got a ping on your account that said, first time orange with expansion. And so now, if you're looking for certainty, which doesn't really exist anywhere in life, but if you're looking for as much as you can get from a statistics standpoint, then you have all of it that you could possibly ask for, and it happens to be at this moment in time. So long as Bill hasn't come back to you and started telling you, terrible things that just make the fundamentals crumble, and everybody else is still the same, like technically, for that person who wants all of that certainty, well, now they have personal friends that they trust. They have publications and, fundamentals, publications that analyze fundamentals. And then they have an idea of public sentiment around the space and around the asset. And this could go in the stock world too. And then lastly, they have as much data as they can get relative to like statistics behind the charts of what, will statistically happen with price, and knowing that everything about it, is still has risk. They can set stop losses where they see fit, so they can at least protect any position, any decision, in a way that it would never affect their whole life. And that's I think that's something I got from. I think it's kind of common sense, but it also has gone out the window with a lot of people, because we've seen how a lot of the world, has chosen to make decisions. But the concept of, applying asymmetry and risk reward to all these decisions in your life, and a lot of it is in the Nassim Taleb books, like The Black Swan, Fooled by Randomness, and those books. Very collegiate, he's got an interesting persona, but there's quite a bit in there. And Ray Dalio says the same thing. Like, certain things, you do the math on them, and there's certain decisions where it's obvious that you are not willing to live with the downside. And so do not do that thing, and so some people will do it, and they're like, all I have in the world is $50,000. What happens if I lose it? Well, I lose everything. That person shouldn't invest the 50,000 into the thing, the opportunity that's been put in front of them. They can, but it could obviously be great, and then that person has a great success story. But I think for every person that has a great experience, there's the one that's all they had was 50 grand, they lost. And it's just a really sad story about how they couldn't play the game anymore, and they had to reset their whole life because they made that one terrible decision. So we hear a lot about the ones that I would say are successful, but we probably don't hear so much about the ones that lost everything. So for me, like, my way of doing things, the only one I can speak of, is just, I never put so many eggs in one basket that I can't, that I can't handle it. And that's, I think, just a good way to always be able to play the game the next day, and never have to be like, I lost, I'll be back in, 5 years, 5 years, as soon as I make enough money from my full-time job to start up again.